Have you ever stressed out over just not even being able to have your own strategy? You go on the charts, you start to really mark up, you back test, you try different things, you watch YouTube videos, and really you're trying to develop what works for you. And it seems like every time you try to do that, what happens? We go on the charts and we start marking stuff up, and either we end up with something that we really don't understand, or we end up with this Crayola box with all these markings all over the screen, and that's no good either. So it's really difficult to build your own strategy, and that's why I'm doing this video today. In this video, I'm going to show you how to build your own strategy in 5 easy steps, and I'm going to give you 4 steps to making that strategy come to fruition right after this intro and disclaimer. Let's get it.
Have faith in your mind, have faith in your grind, invest in yourself, transform in your time. Have faith in your mind, have faith in your grind, invest in yourself, transform in your time. Trading get paid, trading get paid, trading get paid, trading get paid, trading get paid. Oh yeah, trading get paid.
All right, guys, Joe here, and it's time to trade and get paid. So we're looking at GBP USD. I'm looking at the daily chart because I want to start, with our top-down analysis, and I'm going to show you how to build this strategy. So I'm looking at what's really happening in the market right now, and I'm going to show you kind of like how we lead up to what's going on with there. So the first thing we have to do is we have to just take a look what is happening in the market, right? So we look and we see that we just had a rejection. We're moving upward. We have our previous high right here. We got another high right here. But if we're gonna look and see what's going on in the market, we gotta zoom out. Gotta zoom out, because if not, you would have saw this as an uptrend in and of itself, right? Like, that's one of the keys to Forex. We look at, like, if I were to just show you that, you would say, oh, that's low, high, higher, low, higher, high, higher, low, higher, high. That's an uptrend. I could put a trend line on it. And while that in and of itself is true, when we zoom out and we look at the bigger picture, we can see that actually this has been strong downtrend, and we're starting to see maybe a reversal, maybe a pullback, probably a reversal because of this wick that you see down here. But if you're going to build your strategy, what you want to do is you want to take a look back, and you want to go to your previous structure, right? You want to be able to go and see what's really going on in the market. So we have a little structure right here, which is where we are on this replay chart. And we have some structure right here, all the way back up here. I'm going to take this one. Why? Because there's multiple touches. Anytime you see this right here, where you see a multiple touch, that is going to be a solid level. So let's start there. And the first thing we're going to do is simple. We're just going to drop a rectangle on it and put our zone right there. Just like that. I'm going to make that gray so you can see it a little bit better. And that's that. So actually, you know what? Let me make that. There we go. And so now you can see it a little bit better on the chart. So you have that, and that's the first step. Well, then you just got to let the market do what the market is going to do, right? So you have to see, how is price going to react in this area? So if I were to stretch this out all the way like this, how would price react to it, right? And so we come and we watch the market go, and the market is going to start getting close here. All right, now we're there. We're going to see, is the market just going to blow through it and keep going, or is the market going to reject this area and, come back down? So we really need to see how price reacts in this area. So you see price has come and it's kind of rejected, but it's still kind of playing around on the zone. I want to really get a true rejection of this area, right? And so what I mean by that is I want to see something that just completely breaks the area. So let's see what we have going on. See how price comes back up. So this shows you right here that we are trying to reject, but it's still kind of giving you that one last push. One thing to remember is that sometimes we can say the first breakout is a fake out. So as you see it kind of try to break out here, let's see how price reacts. And you'll see the next candle. Now that's really what we're looking for. There's really no volume in any of this, right? There's no real volume in any of it. This here is where you see volume come, and that volume just comes and absolutely blasts through that area. So that's one thing you can do there. That's another good thing to do. Another thing to do here is this. Once we have that rejection area, we want to drop a fib on it. Okay? So when you come and you drop a fib on it like that, now you can see where your golden zone is. So we just drop a rectangle right there. Just turn it into the golden zone. And there you go. Now you have your high and your low, and you have your golden zone area. Now you'll notice how I dropped that fib. I didn't, most people just kind of drop it like this, right? They just want to see the, the horizontal levels. That's not the right way. There's that vertical or that diagonal line in there actually means something. So what you want to do is you want to come here, and yes, you want to get your levels right at the top and at the bottom, but you want that diagonal line to be on structure, okay? And basically treat it like a trend line, right? And what that gives you is not only does it give you the price, but it also gives you the timing. And so here, that's a really nice thing right here. You have structure, you have this go all the way up, and now you just have a break at this level here, okay? So now that you have that break, we can start looking for something that's gonna come and retest this golden zone. Had this continued up, then what we would be expecting is that if this was going up, in other words, then we would have said, well, this part here is not really the end of the extension, so we would just continue up until we have that, and then we would have dragged the fib up to here, right? But since that's not what happened, since we got this to come back and break the zone from the previous structure, then we can say, here's the fib level. Here's our 0 and our 100. We're gonna drop it from low to high. We're gonna put our structure there, and we're gonna look for opportunities to go down. So that's a really, really great way to use your fib tool. Now, here's the next thing that we're gonna be looking at. Can we get a trend line break that would confirm the area to come back down to the golden zone? So let's see what happens in the market. You get that little retest there. There's your volume. Same thing that happens here. You get that retest, a lot of wicks. Then you get a volume candle, right? It comes in and engulfs. And then the next candle comes below. It opens below the trend line. So we're really, really happy about that. You get that candle that opens below the trend line. That gives you your break. It stays under the trend line as it closes. And you can be looking for an entry at this point. Now, if you're a breakout trader and you're okay with, just getting in right on the breakout, then more power to you. There's your entry. If you are a retest trader, you would likely want to see how it's going to retest either the trend line, the 12, or potentially even the bottom of the structure level. So let's see what happens. And kind of as we go, you'll see that retest is starting to happen already. Okay, and so let's come out of replay mode and see where we actually are. And that's where we are in the current market right now. If you're a breakout trader, you're sitting here and you're kind of even right now. And that's why sometimes it's better to wait for a retest, especially if you're on the higher time frames. I would say wait for the retest, and then you want to look for the entry on volume. Okay, and so at this point though, we're looking really good, because let's say we do get a retest up into this area here. Now we would set our stop behind our previous structure, and our target would be the golden zone. Okay, now you say, well, what if it don't go all the way to the golden zone? Okay, well, put your target at the 38. Either way, you have a really good risk to reward. You're looking really solid, and you have a lot of opportunity for a number of pips with good risk to reward. So step one is to identify the structure where the market is going to gather liquidity or come back to gather liquidity on the next move. Number two is to establish your structure here, and you want to drop your fib to find out where your structure level is. Step three is to see how price is going to give you a true break of the structure level. Step four is to get the break of the trend line. And then step five is to make sure that your risk to reward is in good shape. So that's the 5 steps to getting into a trade setup of any kind. So now let's take a look at something else. Here are your 5 rules that you have to have, okay? Because there's 4 steps, and I'm kind of giving you a lot of numbers here. Your 4 steps, I want you to remember this word, REST, rest. I don't want you stressing out when we build a trade setup. I want you to be able to build it and then rest. REST, rest. Okay? The first letter, R, means rules. Okay? So you have to understand your rules. What are your rules for your trade setup? So now for me, for my trade, my rules are, number 1, you must determine that price is at a structure point. This is what we talked about back here. And we see the confirmation up here, right? Number 2, it must be at a critical level. 0, 50, 61, 100. It has to be something like that. I don't want to trade like into something that, like, I'm not going to trade into the 50, right? I like, if we're here, I'm not going to take a sell into the 50. But if we're up here, I'll trade down toward the 50 because I'm trading away from a previous structure level, right? So I want to make sure that I'm at a critical level, whether that be a fib level, a daily high or low, or it could be something like a supply or demand zone or an institutional level. But I must be trading at a critical level. Number 3, you have to have proper risk to reward. If the risk to reward is out of whack, if the risk is up here and the reward is like this, well, it doesn't make sense for me to enter this trade and risk more of my account that I could potentially gain. So for me, I like my risk to reward to be somewhere around 1 to 2, 1.186. I'm okay with that. 1.86. I mean, I'm okay with that. But normally I like a 1 to 2, and especially when it has potential to go even further, right? So I'm okay with this 1 to 2, as long as we're, using that risk to reward to enter the trade. Number 4, must have a candle or breakout signal. What I mean by that is, like right now, we're looking for an opportunity to trade. Now I enter on 3 different types of candles, basically, only. Number 1, my favorite, is a pin bar. So the pin bar candle is the candle that has the long wick, short nose, and the small body. Okay, so if you get a candle that comes up here and rejects at this level here and gives you like that pin bar, well, I'm going to be extremely happy with that, and I'm going to look for an entry off of a pin bar. Also, there's an engulfing candle. An engulfing candle means it's the candle, in this case, we're looking for a bearish engulfing. So a bearish candle that is bigger than the previous bullish candle. Or a close below candle, which is like an engulfing, but this candle goes all the way down past even the wick of the previous candle. When I do trade a close below candle, I always trade the retest. I do not trade the breakout on a close below candle because generally the risk to reward is not there for me. Okay, so here you go. You have to have a candlestick or breakout signal. Now sometimes, let's say that that candle is not exactly what I thought it would be. Maybe not a pin bar and engulfing, but I get it. Let's say I get it at an exact trend line break. I'll take that. Or maybe it's at a neckline break of a head and shoulders. I'll take that. Maybe it's at the break on a double top. I'll take that. But it has to have some entry signal other than just saying, hey, I think it's time to get in. Like, I really have to have something that tells me this is a good trade setup. And last but not least, there must be opportunity for me to scale out of the trade. I never leave my trades just running forever. What I do is I always find opportunities to scale out. So what I mean by that is if I were to enter the market as it retests this area here, let's say I get a pin bar and I start entry. Well, here's what's going to end up happening. At some point during this trade, we're going to end up with price moving. So let's say I enter and it starts to go in my favor. Well, price is moving. Well, guess what? I'm further and further away from the stop loss, right? So at some point I have to address that. So if I enter the market and I start to move, I have to be able to look left and find structure levels. Like one right here. That's a good structure level. So for me, I would like to take that and I would say that might be an opportunity for my first scale out. Okay. Number two, maybe I'll come down here. I will look and I see we have levels here. Now, do I want to go all the way down to the bottom of the level? No, I want to come up here into where the rejection area is. And that might be my second opportunity for scaling out. And then of course the 38 would be another. So as price moves past these levels, I get to here. What I'm looking to do is I'm waiting for it to extend and retest. One at the extension, I'm going to take my full lot size and I'm going to cut it down by 25%, or I might even cut it down by half if I'm scalping. So if I'm in at a $10 lot size, at this point when it crosses that line and extends, I'm going to take that $10 lot size and I'm going to take it down to a $5 lot size. I'm also going to take this and I'm going to try to put this stop loss behind that entry candle. Maybe it was a pin bar or whatever it was. I'm going to take that and I'm going to put that behind that entry candle to secure my profit on the way down. As price continues to move, and now look, again, if I were to let that run, look at my risk reward so far out of whack. Really around the 23, and as it passes, I'm already looking for opportunities to move this down past previous pullbacks. Okay, as I cross over my extension points and my take profit points, I'm going to take another half of my trade out. If it's now it's a $5 lot size, I'm going to take it down to a $2.50 lot size, and I'm going to let that run. I'm going to move my stop loss back behind the 23, and at some point this trade is just going to close and I'm going to be out of the trade. So that's my 5 rules. Before I even get to a place where I'm going to enter a trade, I have to make sure that those 5 rules are met. Number 1, I must determine that my price is at structure. Number 2, it has to be at a critical level. Number 3, it has to present proper risk to reward. Number 4, I have to have a candle or a breakout signal. Number 5, I have to have opportunity for scaling out. So that's my R. R-E-S-T. My R are my rules. What are your rules? I want you to comment below. Tell me what your rules are. Let's talk about it. Maybe I can help you fine tune those rules. So comment below. Maybe put your bullet points. 1, 2, 3. Whatever. It might be 4. It might be 5. For me, I have 5 rules. I don't know what you have, but let's fine tune those rules to make sure that you have a solid trading strategy. Letter 2 is E, which is entry. So when we enter, so once we have our rules, our conditions are met, our rules are met, now we're looking for entry. That entry is going to come in my according to my rules. It's going to come when I see that pin bar, that engulfing, that close below, that head and shoulder break, or whatever that looks like. Once that happens, that's when I can enter the market. So again, I'm going to put this here. I'm going to have that. Let's say it's there. I'm going to put my stop back here. All right, well, we'll focus on that in a minute. But my entry, E, is going to be when the market presents to me an entry signal. Okay. My S is my stop loss. I'm always going to go behind previous structure. And in this particular case, that structure stretched me out. So I'm going to go back behind there, and I'm going to make sure it makes sense with looking back here. I'm going to make sure it has structure to support it, and it does. So I'm going to make sure that my stop is not sitting on the candles, because how many times have we seen it come and touch and then go? It's going to be behind the candles, right? It's going to be behind the structure, because I want to let it give it room to be able to touch that structure and go without stopping me out. And last is my T. It's my take profit. My real target is I like to see it get to the golden zone, but I'm not going to set my take profit there. I'm going to set it at the 38. And what I'm going to do is I'm going to scale out of the trade like I showed you a few minutes ago. And as we get to this place where we're down by the 38, maybe I cut, you know, maybe I cut my lot size down to where I only have 20% of my initial lot size in. I've already secured the bag. I've already put majority of the money in the bank. And now I'm just going to let it run. And when it gets to the golden zone, I close it. Maybe I remove that take profit and I just let it run. So for me, if I'm scalping, I don't even use a take profit. If I'm day trading or swing trading, I do use a take profit. But if I'm scalping, I do not use a take profit. I just do it manually, because majority of the time I'm out of the trade with, you know, less than an hour, like 30 minutes. So, you know, if I'm day trading or if I'm swing trading, then I do use a take profit, and this is how I would do it. So that's how you want to set your trade strategy up. REST. You want your rules, your entry, your stop loss, and your take profit. And you want to build that on those rules that you have already predetermined before you ever get into the trade. As you set up your trade setup, you know, you want to come back and look and see, how do I set it up? Structure. I have to have my my fib levels. I want my critical level, right? I want to be able to do everything that I say I'm going to do here. I want to be able to look at my fib levels. I want to look at where my golden zone is. I want to see if I have a trend line break. I want to see, do I have volume going in, with me or against me? I want to see where we have something that breaks previous structure. Like, these are the things I'm looking for when I'm setting up a trade. So anyway, guys, comment below. Let me know if the REST or if the 5 steps, my 5 rules, see how they apply to yours. If my 5 rules can help you, use them. If your 5 rules are different than mine, comment below, and maybe I can help you fine tune your rules. But either way, I want to see you win. So make sure you track what you're doing. Don't just trade, you know, kind of willy-nilly, right? I don't want you to just trade just to trade. I want you to track what you're doing, pay attention to what you're doing, and be careful with every trade you take, and make sure you follow a set of rules. All right, guys, there you have it. So I hope that video brought you a lot of value. I hope it helped you to build your trade setups and your strategy, okay? And if you want to learn more, you go download my free app in the App Store or in the Google Play Store. Just type in TGP Forex, download the free app today. There's a free starter course on there, and stay up to date with everything I'm doing. Also, if you want to check out my brand new platform and see exactly what Trade and Get Paid is doing, man, jump on board today with all the other students that are jumping on board, and let's eat together. You get to be inside the classroom with me, get my trade setups and everything else I got going on. It's an absolutely dynamic platform. TradeandGetPaid.com, links in the description. I'll see you in the next video.